All right, so today's class is going to be how to bounce back from a big after a big loss. So let me share my screen. All right, so can everybody see my screen? And can you also hear me real well? If so, put a 3 in the chat. We're finna get this ball rolling. Boom. All right, bet. So how to bounce back after a big loss. This was requested. So I'm gonna go ahead and get into it. Disclaimer: I am not a financial advisor, and this is in no way financial or trading advice. I am simply sharing option trading strategies that I use and have been successful with in the stock market. This presentation is for educational purposes only. There are significant financial risks involved with trading, and I am not responsible for your losses in the market should you decide to utilize the information and or strategies discussed within this presentation. By choosing to proceed, you're acknowledging your understanding of this disclaimer. Boom. All right. So there comes a time in your trading journey when you will lose big. Statistics show that 40% of traders quit after 1 month. Statistics also show that 80% of traders quit within the first 2 years. How you handle your big losses will shape your trading journey. So the first thing you should do after a big loss, you should just take a break. Do not try to revenge trade to get your money back. It will compound the damage done to your confidence because trading is 90% psychology. You can have the best strategy, but if you can't control your emotions and have patience, the strategy is ultimately useless. So, what I recommend is the 72-hour rule to handle big losses. So, what's the 72-hour rule? The rule is simple. Whenever something tends to upset you or someone's actions or words infuriate you, wait for 72 hours before showing your emotions. In simpler words, hold back your immediate reaction and give yourself 72 hours before coming, I think I meant calming down to any conclusion. This relates to trading because you should take the 72 hours to get your emotions together and come to grips with your loss. Over time, it will not affect you. But if you don't, you will jump out of trade sooner than you should and possibly take a loss that will further hinder your trading psychology. So what I mean by that is um I almost lost it. All right. So what I mean by that is if you take a loss, but you don't take a break and you immediately start back trading, you'll often become, I think, what they call like gun shy or whatever. So you'll hop in a trade, and as soon as it go the other way, you're gonna hop out. So now you're playing like scary and stuff like that. So you would end up taking more losses than necessary instead of just getting yourself together. Boom. So what do I do during these 72 hours? You can go over your losing trade or trades if it was more than one to see what about it went wrong. See if there's anything that you can do to make your strategy better. You can practice paper trading, which we often, say that you should do, or charting. On Trading View, there's a replay setting where you can like delete part of the chart and then like play it back. That's how I practice candlestick to candlestick with the strategy that I use. You can set small goals to accomplish when you start back trading, come up with new rules to abide by when trading and stick to them. Go do something fun and get out the house because sometimes we just need a break from trading in general. Sometimes you just need to just go play, top golf or whatever it is that you do, hobbies and stuff that you find fun. Go do that. And then if you need more time off from trading, take it. You don't have to just do 72 hours. So when you start trading again, when you do start back trading, trade with less than you normally would. For example, if you were buying multiple contracts, only start with one. Let your entry contract just be one. Don't go so deep into it. Or if you, let's say you were only buying one contract, instead of buying contracts that are more than $1, that are $3, which, times 100 is $300. So don't get into a play that's more than $100, which is $1. um, Buy those contracts and just trade with less money because oftentimes another reason why people quit is because they blow their account. They have no way to refund it. So trade with less. You don't have to trade on the big companies that cost a lot to hop in. You have to rebuild your confidence. So take the 15 to 30% gains. Kay always recommends, especially when starting out, that you take, I think it's more so like 10 to 20%, but do that because that's going to build your confidence. The more wins you get under your belt, the more confident you will be. Even if it's 20, 10% wins, they're still wins, and those wins add up. And yeah, so exit those positions after you see 15 to 30%, or just play it really conservative, 10 to 20%. You also want to have tight stop losses or mental stop losses and cut those trades. Sometimes with these brokers, they don't, even though you have a stop loss, they may initiate it late because their priority is not your stop loss. Their priority is filling other people's orders and stuff like that. So sometimes they put yours on the back burner. Um, People have complained about that a lot with Robinhood and not executing their stop loss. Or like I say, have a mental stop loss so you don't have to worry about the system executing the stop loss for you. You can go in and do it yourself. Also, don't chase anyone else's plays. Only focus on yours and what you know, because your confidence is a big part of your trading psychology. It also helps you know what went wrong with the trade when you picked it. If you take me, Kay, or um, Key's play and it went left, you don't know why it went wrong. You know what I'm saying? You just know that you probably tried to go full port on on somebody's trade. You don't know what went wrong with it. So you won't be able to actually assess why you lost and why that was such a big loss for you. Also, stick to the rules you established during your break from trading. Also, establish a pre-market routine. And if you don't do your routine for the day, then you don't trade unless you have plays that you already researched. So, for instance, you might have some plays that you went over, let's say today when you get off this call, or yesterday, already mapped out for the week. Okay, that's fine. You kind of still need to do some type of pre-market routine, at least get up to date on the news or whatever. But you can still do those plays. But if you don't have any plays and you just wake up and you're like, oh, I'm late, it's 8:30, I'm just gonna hop in something. Don't do that, because you're not going to know what's going on with the trade, why it's going to go wrong. It might pull back for a little bit and then go up. So it's best if you have some type of routine in place and don't play a play, because you don't have to trade every day. You know what I'm saying? So if you're not organized, then just don't trade. You know, establish being disciplined and cutting the emotions out of your trading. Look at every trade the same. So going back to how you should add your positions, just get one contract at a time, or across the board enter trades with the same amount. So if you can play each trade $200 into each trade, pay $200 into each trade, or play $100 into each trade. Don't look at it any different. Don't go full port on one trade and only take a sample size on another. Look at each trade the same, but don't go full port in every trade. I'm not condoning that, but look at each trade the same, basically. Know yourself, know your faults, because trading will reveal your true self. Trading will reveal to you how greedy you are. Just being honest, it will reveal to you. If you say, I'm not a greedy person, but you go on full port into trades, or you already up 100%, you're like, I think it could go higher, then you have a greed problem. So that has been revealed to yourself. So just know yourself, know your faults, know if you're impatient, because also it will help you in establishing your strategy. Maybe you have too much anxiety to swing trade. Maybe you should work on becoming the best day trader you can. Or maybe you can't day trade, so you work on swing trading or playing, skips or leaps. But knowing yourself will help you know what strategy is going to best suit you and what your faults are. And that way you can try to work around those faults. And make sure you are journaling every trade you take and go over it after the trade is over. Constantly try to adjust and see what more you could do and how you can fine tune your strategy every time after you take a trade. Because sometimes what might have helped your trade might not have been your analysis. Maybe it was news or whatever. So just make sure you're journaling, whether it's on an Excel spreadsheet or if you just write it the old fashioned way on a notebook, piece of paper. So understand, option trading carries big risk. And with big risk, you must have discipline as well as a plan. Build losing into your mindset, because losses will happen. How big you lose is up to you. If you see the trade is going against you and you down 20%, right? You can just cut it right there. But if you let it keep going, now you're down 98%. I mean, you could have cut it at 20, but you was like, oh, I think it's going to recover. You can always exit and re-enter the trade. You don't have to send yourself on that emotional roller coaster. So you have to stick with the rules you established after a big loss because it will help you be a better trader. Whether the loss was because of you or because of news that affected the market. So it was whether it was bad analysis or whether the news affected the market. So this past week was quiet, which it might have affected your trade. But you should always stick with those rules. Maybe one of those rules is making sure you read the news more. You know what I'm saying? And better prepared to have a better overall sentiment of what the market is. The mindset of making a quick buck will end up making you lose. Oh man, my grammar. Gotta work on that. Making you lose big again because you will enter a trade with a big size or full port. So once that trade reverses against you, you will jump out. Oftentimes I've seen where people have went full port or went bigger than they normally would. They start seeing because now that 10% might be 10% of your full account. You know, you might not be able to take such a big loss, even though it's only 10% because you went full port or majority of your port. You end up getting scared and hopping out, and then that trade reverses and go back the other way. So you want to make sure that you don't have the mindset of making a quick buck because it will make you enter into trades with a bigger entry, more contracts, more money than you normally would. If you haven't prepared to trade for the day or week, it's okay to not trade. Don't feel left out. There will always be more opportunities to make money. I know that y'all see in the chat people making money. You be like, ooh, why ain't I making money? I gotta trade something. I gotta do something. I gotta keep up with everybody. You know what I'm saying? You be like, Lord, I see what you have done for others. Please do the same for me. There will always be more opportunities. Do not chase, do not FOMO behind somebody else on a play. You will lose money. Sometimes you may get lucky, but do not be trying to trade with luck. Prepare, have a plan, have rules, stick to them because in the long term, that's what's going to work out. That's going to be what helps you be a successful trader. That will help you not have such big losses. And that's how you can recover from a big loss because how big you lose is up to you unless you just see the news tank the market, but still on a regular time without the market being affected by quiet witching, how much you lose is up to you. And you don't have to trade through bad news. You can just wait because cash is a position. Sometimes it's the best position. And we're going to go ahead and take questions. That was the end of the slideshow. So, yeah. So, all you got to do is raise your hand and then we'll answer your question or whatever. So, let me put this over here. Boom. All right, Rob, you can go ahead and ask your question.
Hello, squad. Good afternoon, everybody. How's everybody doing?
All right, how are you?
I'm all right. So, I know the presentation is on losses and whatnot, and I'm following the concept, but I really had a question as far as like when picking your strike price, as far as close to in the money and far out of the money,
Mm-hmm.
what is the difference on the profit? So, say if we get the contract a few weeks out, wouldn't you want to buy close to in the money to gain more profit? Because I see that we sometimes go like a little far out the money, like a few dollars.
It's that's one. Some of that is just trader preference. When it comes to picking far out the money, the percentage gains are going to be bigger, more so than closer to the money. I can't say whether or not it's more or less, because 100% of a point 50 contract is a lot, but also at the same time, that's a big percentage number. If you got something that was $2, you know what I'm saying, that 20-30% is almost the same or close to it, you know what I'm saying? My math probably was off on that, but it's really just about percentage gain. It's also cheaper to be far out the money. So a lot of those factors play into why people pick what they pick. But currently for me, I'm not picking no more than 2 to 3 strikes out the money.
Okay. I
It
mean, yeah.
also
Uh-huh.
it also has a lot to do with the intrinsic and extrinsic value. So when you're dealing with out of the money strike prices, because it's not made up of a lot of intrinsic value, obviously you're going to have a higher reward when you're picking out of the money. So always consider, the bigger the risk, the bigger the reward. Essentially, when you're doing in the money, you're just picking something that is giving you a lower chance of your contract expiring worthless. It's not going to eliminate the risk because obviously the stock could fall below that particular strike price, which would essentially put you out of the money. But the further that you go out of the money, you're exposing yourself to more risk. So your reward is going to be greater that way. But like Ray said, it's all trader preference. Some people, are comfortable with being out of the money because they may be able to risk that and they want to find something cheaper. Other traders may say, I want to stick closer to the money because I don't want to lose. I don't want to lose money. So it is trader preference.
Okay. All right, perfect. Thank you.
No problem.
No problem. All right, Robert Bash, you can go ahead and ask your question.
My question was, I want to know, how far, from the 52-week high would you buy, a stock?
Like, are you talking about like buy the actual stock, or are you talking about like the option?
The stock, I haven't gotten into options and everything yet.
Um, that would probably be like just looking at how the stock moves, and depending on how long you plan on holding that stock, just get a gauge for how the stock typically moves on average. And that way, if you get an idea of how it moves, like if it moves $3 a month, if you looked at the chart and you saw that it does $3 a month and you said, I only want to I only want to hold this stock for 3 months, then you may want to say, well, my target is $9, if that makes sense. So you just want to see how the stock moves, and that can help you to gauge what it can actually, what your target should be.
Yeah, also look
Okay.
at the fundamentals if you plan on holding for a long time. Investors.com will help you with that. But
Okay. And
yeah.
one last question. Is there a platform that's better than others for trading, or are all of them basically the same?
There are
Right.
differences. Like a lot of people like Webull, but I think like Thinkorswim is it's more complex than Webull, but it's also more powerful. It has a scanner on there, but all of them have their pros and their cons. So
Okay.
there isn't necessarily one that's specifically better than others because it's going to come down to the trader. But the ones we recommend is like Webull, Thinkorswim. I think some people like TradeStation. We just be like avoid Robinhood. That's really the main thing.
It really, when you guys ask questions like what's a better platform, or, a lot of these things are just going to be what type of interface works for you. How comfortable are you with, navigating through that particular brokerage's website or app. So it's going to be based upon what you need as a trader. So we can't really say what's better because I love Webull and, Ray loves Thinkorswim.
But I don't love their chart. I hate Thinkorswim chart.
Uh,
Thinkorswim chart looked like Windows Vista. It looked like something from 1999. So I use TradingView.
Yeah, so you may just want to, play around with them, paper trade if they allow you to paper trade, and just see, what works best for you. And that would be the best, recommendation that I can give.
Okay. Thank you.
No problem.
No problem. All right, Braxton Lee, you can go ahead and ask your question.
Hey, if you're following a trend going up or down, what would be the best strike price to buy? Would in the money or out of the money?
It's still the same thing as far as like with that. It's still gonna be like your preference and where you think it's gonna go.
Uh-huh.
But yeah, if you're following like a trend up or down, it's just when it comes to picking a strike, just stay consistent with what you've been doing and like your trading strategy and what you like to risk and what you like the reward to be. And you just have to play off that and see like when it comes to like if you're following a trend with options and stuff like that,
Mhm.
if that it's trending up and it's past the 52-week high, it keeps setting 52-week highs. With that one, it might end up pulling back. You know what I'm saying? So you have to just, watch those factors to see how close it is to a 52-week high if it's going up, and how close it is to a 52-week low, and stuff like that. Because eventually they may reverse and go the other way. So just be mindful of that.
Okay.
And think about this: if you're following the trend and you're trying to see like if you should play in the money or out of the money, one thing that you can consider that'll help you is how satisfied are you going to be with the strike price you pick versus how far you are expecting that particular stock to go, if that makes sense. So wherever your entry is going to be, a good entry is going to be based upon how much money you are potentially going to make if you take that trade. So if you decide that you're going to play out of the money, then think about how that stock price is going to eventually meet that particular strike price or not, and how that profit is going to look for you.
Okay, because sometimes I notice when I'm following a trend, I see that when I buy in the money, the break even price be like, all you need to do is go up 20 cents and you'll be in the break even. I'm like, okay.
Break evens matter more so if you're going to exercise the contract. So we don't really focus on the break even unless we are going to exercise the contract. And exercise mean obviously that you are in profit and you have the desire to buy 100 shares of that underlying stock. So if you're not looking to do that, then you don't really have to pay attention to the break even.
Okay.
Yeah.
Thank you.
No problem.
No problem. Tasha, you can go ahead and ask your question.
Hello, and thank you both for taking my question. My question has to do with the theta burn. I think you guys call it the theta burnout, where it kind of takes away from your premium that you bought into a contract.
Theta decay.
Theta decay, yes. Okay, so does that happen more when you buy a weekly contract, or is it just overall for every kind?
Yes, the theta decay is going to be pretty much on every contract, but theta is higher on shorter contracts, and theta is less on longer term contracts. And one thing that I have been kind of putting out into the community too is like try to stay away from buying contracts after Wednesday, because closer to expiration, theta tends to rev up very rapidly, and it happens in real time. So there's no time of day you can pinpoint the exact amount of theta that came out of your contract because it happens in real time. So yes, you're gonna think of it like this. You don't have a lot of time on your hand when you're buying weekly, because a weekly contract expires the week of. So you don't have a lot of time. And so that theta, it starts off, kind of slow, and then it revs up the closer that it gets to expiration.
Okay, so once it does start to decay, can you gain any of that back?
Yes. Well, okay. So I put a video out in the community, and I would recommend that you watch it. And then me and Ray also did one on the Greeks, but your delta can compensate for theta decay. You always want higher delta, lower theta. So I would recommend watching that video because your delta can actually compensate for the theta decay.
Okay. Cool. Thank you.
No problem.
All right. Let's see. iPhone, you can go ahead and ask your question. iPhone. Okay. We'll just go around you. Janae, you can go ahead.
Hello?
And ask you. Oh, never mind. Never mind, Janae. Hold on 1 second. Go ahead, iPhone.
Hello?
Yeah,
That's me? Oh, hi. I didn't know it was me. I have one question, right? I'm new to this. I have stocks, but I never did an option or a call. And can you guys do a video of how to do options, I have Ameritrade.
So you have TD Ameritrade. There's
Yes.
a if you go to Market Facts and Resources, yeah, that's how you say it. Market Facts and Resources. There's a playlist that I put together, but there are the beginner videos that go over options on that. As far as like the very bare basics of what it is, so that'd be like the best place to get that, and then watch the other videos that we've done in Bull Squad University.
Okay. Thank you.
If you need something that's a little bit like one-on-one for you, you can also go to provider resources, and a lot of the providers, like ICurlyCae, he has a course that's in there that's amazing. So you can also, if you want to spend some money so that you can have a little more, something that's a little catered to you, you can also go into provider resources, and there is some options trading content in there as well.
Okay. Thank you so much.
No problem.
All right, Janae, you can go ahead and ask your question.
Okay, thanks. Hi, everyone. So 2 questions. One, thank you all, as usual. The first question is about like spreads. I don't think I've heard you all talk about option spreads much. So it's more of a logistical question, and I would be curious to know if it is something you will talk about. But I wanted to know if Webull has the option to do spreads, because I want to get off of Robinhood, but right now I don't see I just see that's the only place I can do spreads.
Yeah, you can do spreads on Webull. You just have to, I think, be like what, a level 3 to be able to do it, because that's I think you have to be able to have margin or something like that, because it's like 2 and 3-legged options and stuff like that. So
So
you
with
are
a
able
cash
to.
account, you wouldn't be able to do it.
No, I don't think so. I think you probably need credit, but don't quote me on that for sure. I just know for sure that Webull has it, since I don't actually trade on Webull, but I have seen that there's an option available on that.
Okay,
2
thank
trade
you.
options.
And then
2 trade spreads, my bad. Go ahead.
Okay, that's helpful. Thank you. And the next question is about just like charting software. So I am liking like Webull's charts, and I'm just wondering, like, even with TradingView, which I know Carly, I think she mentions that she uses that a lot. I'm wondering, like, what is the value of paying for a paid charting service? Because I've like done free trials of stock charts and TradingView, and I'm just wondering what's the benefit when you have other charts for free.
Real-time data.
Well, not necessarily
multiple
that.
layouts that you can.
Not necessarily on TradingView. You have to pay for like the actual real time quotes.
Yeah, that's what I'm saying.
No, but it doesn't come in your membership. Like you have to actually like hit like NASDAQ and pay like $1 for that. But as far as like paying the actual TradingView, it gives you more indicators to put on your chart, and like multiple charts layouts you can have. So you might be able to have like 8 charts up at one time. So, but go ahead, Kay, my bad.
No, I was that's what I was about to say. So you can have access to real-time data. Some places call it Opera. You, like Ray said, you're going to get more indicators. You'll be able to have more than, I believe, 2 charts on your screen. Some traders like to look at like maybe 4 side by side on their screen, and it gives you access to do that as well. So it gives you a little bit more that you can play around with. But I mean, the free version of TradingView is great as well, because they have scripts out there where, other traders have put together like these scripts where you can, bypass having to pay for so many indicators. You just have to look for them.
Okay, that's helpful. Thank you both.
No problem.
Yeah, let me reiterate for the people that may be trading on using TradingView for charting. You have to actually like, I can't remember what setting, because I tried it, like tested it out for like a second, to like pay for the actual like real time NASDAQ quotes. It's separate from you actually paying for the membership. So you have to like seek that out separately. But Davian Gucci, you can go ahead and ask your question.
Yeah, Dave, man, thank you, y'all.
Oh, my bad, bro.
No, you good, bro. I just had a quick question about the pre-market regimen. So I've heard that before, but like, what exactly could I use for a pre-market regimen? Like, where do I go? Because I seen that you said the news and stuff too, but like, where on the charts do you look for pre-market information and stuff?
Like you can use like Twitter is always a good resource. I think that's like Key's like favorite resource to use. CNBC. And then sometimes you can just like Google the ticker and see what they say. I also look at like I think like if you pay for like Benzinga Pro, they have like some pre-market stuff, as well as like in TD Ameritrade's Dash. If you're using like on desktop, they have like some resources for you. So those would be like the places that you can look for your pre-market routine. But also like if you use scanners and stuff like that, you go ahead and scan for some things, see what's like gapping up, gapping down, see if there is, you know, price upgrade, price target upgrades or price target downgrades. So yeah, those are things that will help you as far as like your pre-market routine. Does that answer your question?
Yeah, bro, did appreciate it.
No problem.
Oh, I want to throw this tip in here really quick because I know some people were kind of amazed that inbox me. You can go to Twitter if you have a Twitter account and you can search a ticker. You just put obviously the $ in front, put the ticker, and you can literally search and see what the sentiment is for that particular ticker. You can also go to stocktwits.com if you're, you know, how you have a lot of people that ask, you know, what do you guys think about this particular stock? You can literally go and search the ticker and you can get a room full of sentiments from different traders on what they think about that particular ticker. And Market Watch is also something that's really great to look at in the morning so that you can see the upgrades and downgrades. MSNBC, CNBC, you know, even Robinhood, which I absolutely loathe, gives information too that's, you know, sometimes useful.
Yep, Robinhood the ops. Also in TD Ameritrade, they have like a tab if you go on your watch list to where you can look at social sentiment, and it'll give you like a list of tickers that has like the social sentiment, high social sentiment. So that's also available on TD Ameritrade. Yeah, Oppenhood. Asia Gibson, you can go ahead and ask your question.
Okay. Thank you guys for doing this. I had a question about when I should sell an option. So I've been doing weekly, so I know like I have my 20%, but I just recently bought one that was a little further out, maybe like 3 months out, and it hit my 20%, but I didn't sell it. Like if they're further out, should I just hold it longer or should I just stick with my 20% since I'm still new?
Stick with your 20% since you're still new. I put into the chat that your risk tolerance is a muscle that has to be built up. And if you're still new and you're still trying to feel your way around and you're still trying to build your account up, then don't get greedy. Do not stray away from your trading plan because that's a lot of times how traders lose. And statistically, most traders are not profitable their first year because we get a home run every now and again, and then we feel like we're invincible. And then we end up wiping away all of our profits and getting clapped. So stick to your 20%, build your account up. And the more you start to compound, then you'll be going to 30%. And then you'll be building up to 40 and 50. But you want to stay consistent with your particular trading plan.
Okay, thank you. Because I blew up my account a couple weeks ago, so I'm going back to my original strategy.
Gotcha.
So.
Yes.
Okay, thank you.
No problem.
All right, XN, you can go ahead and ask your question.
Hey man, thank you for everything you guys do. I was just wondering, you know, like I see everyone, you know, making crazy gains, and that's what I originally started investing. And I'm doing good with like 10-20%, but I was wondering how you guys know to like catch the, you know what I'm saying, like the 100% winners. Like how do you guys go into a trade like that?
Um,
Price
okay,
target.
yeah.
So your price targets, it's all about knowing what a stock can actually do and where the stock is currently, right? So if you see that this particular stock is at a level and it can go up $8 before it reaches a resistance and you have a very good entry, that right there alone can tell you that you are dealing with a winner. I hope that makes sense to you, because it's all about your entries. It's all about um, where you enter your trade at, where you enter your contract at, and that can tell you, okay, this is going to probably yield me 100%, if not more. Does that make sense?
Yeah, so you're saying like the levels that breaks after and you just buy in before the levels. But I was wondering, like, for example, like I really appreciate Kia Achilles plays. You know, he calls out a play, the next few 10, 20 minutes later, it's up 80, 100%, you know, like is that what you're talking about? Like he's just playing like, I guess, support resistance in a way or something like that?
Yes, more than, and Key is actually on here, so maybe we could get him to say something. But um, that's exactly what I'm talking about. Somebody just put in the chat that entry is everything, and that is so very true. You want to, in most cases, or in better cases, you want to be able to enter near a major support level. You want to also be able to chart out your resistance level, and you can actually see where the stock is currently and how far it has room to go. You can see this stock has the potential to run up $5. Something like that can yield you a 100% return, if not more. If you can actually get a gauge for where the stock is currently and how far it can go, then that can help you. Hey, Key, you got something to say?
Yo, yo, yo. Can y'all hear me?
Hey, Key.
Yeah, we can.
So yeah, when it comes to trades, right? I mean, we don't always know when like how high something can go or how low something can go, you know what I mean? Like Kayla alluded to, it is sort of watching the charts and looking at the potential that a stock can have in terms of movement. And so overall, let's say when you look at support and resistance levels on a stock, the resistance levels, if a stock is currently low, then if you see how high a stock has gone to previously, then by using the resistance levels, you can sort of get a sense of how high it can go, you know, based on the previous price information, you know. And so for that reason, and that is sort of what can incentivize holding things for a longer period of time, or maybe not holding things for a longer period of time, but at least having more time on your contract, you know, because that would enable you to at least give some more room for the margin of error that can be possible in your trade. Because although we have a good idea about what is going on in the market or whatever the charts are saying, we still are you know, at the knees of the market and the market makers, as well as news. And so you can think a trade is perfect and everything, and then some news can come out and completely sort of sidetrack your entire plan, especially given the market overall, you know. And so I do encourage being consistent, of at least in starting out smaller percentage range. For me, 30% is great. You will, let's say when I alert trades, you will see that I often alert to the group that something has hit 30%, because that's my first profit target, you know. And then further on, anything above 30% is just gold, you know. But the longer you hold, the more risk is added, but you can take profit at any point. Last thing I want to add is I do understand that a lot of people have been trading weekly contracts. Please, please, please be careful. This last week definitely demonstrated why and how those contracts can be very risky, because they don't offer you a lot of time. In terms of our entire life, not even outside of the stock market, time is your most valuable asset, right? Time is the most important thing to all of our lives. And the same thing applies in the stock market. If you don't have a lot of time on your contract, you're exposing yourself to a lot more risk. And when things start to move sideways or move in a way that you don't want it to, as we saw this past week, then those contracts can lose very hard because there's just not a lot of time for them to recover at all. So I do want to give that means of advice to everyone, on the call. Don't be afraid to take profits early. And just make sure you're managing your risk as you're sort of shooting for higher profit percentages.
Thank you. Thank you so much.
No problem. Let's see.
Who do we have next?
Dennis is iPhone. You can go ahead and ask your question.
Dennis, iPhone, are you there? Okay, we can go to Michael Martin.
All right, go ahead and ask your question, Michael.
Hello, everybody. I am new to, I guess, trading and new to the group too. But we're not new. I've been here for like about a month, but I've been trying to just soak all the information in. And I was wondering, how long would you suggest to like a new trader? How much time should I dedicate to paper trading before I like jump in?
Oh, that's gonna be. I can't give you a time. I'm not really sure if anyone can give you a time. I think the best thing that anyone could recommend would be until you feel comfortable. Like Ray said earlier, you can always go and like back test and go back and look at historical data and see if you can see what someone else may have seen that may have called something out in the community, and just build up your level of comfortability before you actually take on a real trade. And when you do decide to play with real money or trade with real money, I would say like try not to enter into anything that's too expensive so that you can test out your strategy. So
Right.
until you feel comfortable would be my recommendation.
Okay, thank you.
No problem. The only thing with paper trading is that it takes out the aspect of I can't draw the words, but it takes out that emotion that's tied to money when you're trading, which is necessary to help you to understand trading. But paper trading is still a really, really good thing to do before you actually trade.
Right. Okay, thank you.
No problem.
All right, Q, you can go ahead and ask your question. Q, you can ask your question.
Hello, you can hear me?
Yeah, I can.
All right, what's up? I was trying to see like why y'all don't really mess with Robinhood like that. Like I like it, like I be graphing from there and stuff, like charting up. But like I'm trying to figure out, y'all know more than me though. So
because Robinhood glitches. There's no number to call their customer service. The GameStop situation is also another reason why they just halted trading on it and say you couldn't add any positions, and often the people positions they closed it at the absolute low, so a lot of people didn't get the profit that they were supposed to get. So those are just like a couple reasons.
So like which ones, like you can name like 2 or 3 on you recommend?
TD Ameritrade, Webull, Trade Station.
Do they charge monthly for those, or like they free?
I know TD Ameritrade, like there's I think like maybe 63 cents a trade, a contract that they charge you, but I don't know about Webull if they charge you like 63 cents per trade or whatever a contract.
Okay.
If you want something that's closest to the UI of Robinhood, because everyone loves Robinhood because they have the best app UI of any app, That's the great thing about Rob. It's incredible, their app interface, right? The closest thing to that would be Dough, that's DOUGH, or Webull. Those are, I would say, in terms of trading options, those are like the closest in terms of how good the UI is. But the best best platform, as sort of Ray sort of recommended, is TD Ameritrade or Thinkorswim. That's definitely the one that has everything you need to know in trading, but it does require adjustment because it looks complicated from first hand. You know, I mean, you actually have to learn how to use the platform in depth. But in terms of something that's easy to use on your phone or on your computer, Dough or Webull.
Love Webull.
All that.
All right, that's cool. That's cool. Y'all answer my question.
All right, bet.
Samina? Samina, you can unmute yourself.
Hello.
Hey, Samina.
Hi. So I had a question about leaps, and if not an actual leap, buying a contract out for months, like 6-7 months at a time. How would you guys suggest playing those kind of plays as far as like having leaps and like 6 to 7 months out contracts? Because right now, I know we have time on it. So let's say, because right now I actually have one that's 70%, like I'm 70% down on it, but I have until like September. So how would you suggest playing like long-term contracts if you're down? Like, is it a certain percentage where you would cut it, or is it a certain, should I, like not be afraid, but should I be concerned about being down 70% right now because it has so much time? I just don't know how to, or should I average down? Like, when is the best time to average down? I just don't know how to really play leaps because it's such a long time out. So how would you guys suggest going about playing those?
I have a few questions for you that'll help you and whoever's listening that may be in a similar situation. And these are things that you have to ask yourself. But first and foremost, I'm going to recommend that you use the option profit calculator. Someone said this is my specialty. So how far is your strike price is from the current price of the stock? Number two, you know how much time you have to expiration. So that would have been my next question. How much time do you have on your side? What do the Greeks look like? You also have to consider how much that stock has to reverse in order for you to be profitable. And you also have to ask yourself, is it worth it? Because if it's down so much of a percentage, you can always exit and re-enter. But right now, you're down 70%, but you have time. So time may actually help you if the stock can move the way you need it to move within the time frame that you have. And then another thing to ask yourself is, how much does this stock typically move on average? Because if it can do what you need it to do between now and then it might not be a bad thing to hold. But again, please look at the options profit calculator because that'll help you a lot. Ray, Key, do you guys have anything you can add?
Yeah, when it pertains to me, when I play leaps, if I go down more than like 40%, I'm hopping out. Like, I'm not gonna average down or nothing. I'm just gonna re-enter later.
And
I don't
see,
even want to go through them emotions.
And see, it's different for me because 40% on a leap, and keep in mind your leaps are a year. A lot of people think that a leap is, just 6 months or so. No, a leap legitimately, if you were to look it up, it's actually holding a contract for a year or longer, right? So 40% for me in a leap, I probably wouldn't cut that trade unless I just feel like the stock has absolutely no chance of making that move within a year. Or however much time I have left within that year of me holding that trade. So it's different. So you have to make that decision for yourself. A lot of this is just trader preferences.
All right, got it. Thank you.
No problem. because Ray, I had a trade that literally reversed 40% and came back like crazy. So for me, it's like if I'm in a leap and it goes 40%, I can hold that. But if I was in something short term, I would cut it.
Yeah, I don't like seeing them reds. I'll be like, man, I just
Yeah.
re-enter because um I don't really like averaging down anymore. So I'm just gonna exit that and allocate that money somewhere else. Um, flip it and possibly go back into or pick something I think is better. Since I use investors.com, they're often always upgrading who they think is growth and all that other stuff as far as like how they look at a company fundamentally. So
Okay.
I might like a trade better than that trade. So I just go
Gotcha.
somewhere else. Unless I just really, 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 really
Come on, let's
like it.
person.
You're the one who asked for my opinion now. All right. Nicole, you can go ahead and ask your question. If yeah, because I don't think O'Neal was up there anymore. So Nicole, you can go ahead and ask your question.
Nicole, are you there? Nicole? All right. Dennis, iPhone. Dennis? Did we talk to Dennis already?
No, he didn't pick up last time.
Okay.
So I just lowered it. All right, this would be the last question. I'll let you say the name.
Please don't be mad if I say it wrong. Damali?
Yes, I'm here. How you doing?
Fine, how are you?
And you said it perfect.
Great.
I have a question. I'm actually having issues right now with actually buying the actual trade. I'm comfortable with everything, but when I purchase a trade, I'm starting to get these crazy messages. I've tried, I know at one time for the message, it says insufficient option buying power to place this order. Please decrease your order quantity and try again. Options trading. Are you familiar with that?
Yep. You're putting more than one order. You're trying to sell or buy the same thing at the same time with limited funds. So you may have enough to buy one contract, but you're probably like, let me go and try to enter another one while that other one is still there.
Actually, I'm not. I'm really so focused on trying to it would not allow me to. I've been trying to do this for 3 weeks.
Your funds are settled, right?
Uh-huh.
Okay. I'm trying to think of what all it could be because I've seen this before. And typically every situation where this has happened, I've told people you have more than one contract pending out there. You have to cancel the other one so that you can get this one. And I've told so many people and they're like, no, that's not what it is. And then people come back and say, yeah, that's what it was. So if your situation is different, I don't know. But if you figure it out, please let me know so that I can educate others.
Okay, because I'm gonna tell you what I've done already. I have no open option trading available, so I know that's not it. I've been trying to do this for weeks, and somebody did tell me I cannot trade options with unsettled cash. So it was times that I waited the 5 days, let it come up and say, settle cash, and then I would try it, and I still get no luck.
What trading platform do you use?
Webull.
All right, so check what your cash balance says. Don't check settled cash, none of that. Check what the actual cash balance says.
Okay, I got you. Let me see. Options. Okay, I see it. Yeah, I do have it's cash in there. The actual cash. Okay. Oh, you know what? Now, let me ask you this. Now, if prior I tried to do that and the cash balance was in a negative, it's not going to work, right?
It's not. It's like buying something with insufficient funds from a bank.
Got you. Then that might be it. That might be it. That definitely might be. So I'm going to go ahead and try that. And I guess I'll be on the next one. And if anything, if I get my opportunity, I'll let you know that was it.
Okay, cool.
Thank you so much. I appreciate it.
No problem.
All right.
All right, we're finna come to a hard stop. We appreciate y'all for hopping on the call. Let us know what your thoughts, if you like the call or whatnot, in the options chat. And we gonna catch you this week. Okay, you got anything to ask, Key?
Yeah,
If you got
before you
anything to
guys
add.
go, let me ask you this, because me and Ray want to make sure that we're producing content that is going to be essential to help you guys on your trading journey. So if you have any recommendations of something that you might want to learn that we have not already covered, please go ahead and drop it in the chat really quick. We're going to take a screenshot of it so that we can, try to accommodate you as best we can. And if it's strategy specific, you guys, remember that we don't all trade the same strategies. So you might want to invest in a course, or you might want to go through a YouTube to do a specific strategy, because we don't do every strategy that's out there, unfortunately. All right, cool. Ray, you getting some of this?
Yeah.
Okay.
All right, for the most part, yeah, I got it. It's starting to say the same stuff.
Yeah.
All right, so we're gonna catch y'all in the chat. See us over there. Let us know, what I'm saying, your thoughts, your feelings, if you like the class. And we're gonna catch y'all.
Hi, everybody.